Now let's break down our feature story of the day, discuss BlackRock and when that Bitcoin ETF is likely to be approved, according to the former director of BlackRock himself. Let's break this baby down, shall we? Here we go. First and foremost, I want to quote Crypto Rover on a few posts that have a lot of good insights as shared here. The former director of BlackRock, again, the world's largest asset manager, said that the SEC will approve the spot Bitcoin ETFs within 2 to 3 months. You do the math. That means 60 to 90 days, fam. He also said there could be capital inflows of up to $200 billion. Again, personally, I feel that is extremely conservative, but hey, that would make a drastic impact, obviously, to the Bitcoin market as well as the market cap. And he also shared here, within 75 days, the first Bitcoin spot ETF will be launched. Facts. Here's why. In exactly 75 days, the final deadline for ARK Invest Bitcoin Spot ETF will arrive, that date being January 10th. The reality is the SEC cannot reject ARK's ETF and then approve the BlackRock spot ETF. He makes a good point. And considering the Grayscale has already won the lawsuit against the SEC, it is likely that all the spot ETFs will be approved before ARK Invest. Maybe a domino effect. Game theory. Let's freaking go. Therefore, we can anticipate the introduction of the first Bitcoin spot ETF within the next 99 days. I personally feel it will happen sometime prior to the Bitcoin halving, scheduled to take place in 6 months, sometime in April of 2024. But let me know your thoughts, chat. Now, here's where he shares. BlackRock will send Bitcoin to 250,000 per coin. Here's why. The former manager at BlackRock predicts that the Bitcoin spot ETF will attract $300 billion within the first 12 months, which is substantial considering wanting to purchase $300 billion worth of Bitcoin, which is equivalent to, whoa, 10 million BTC. Let that sink in, especially considering there is a supply shock in the market. There is now currently roughly 1.6 million Bitcoin on the exchanges, and over 80% or roughly that figure of the Bitcoin supply is in the hands of the long-term hodlers and has not moved in the past 6 months. So where are they going to find all of this Bitcoin? They're not going to be able to find it. It's going to cause a massive surge in the market. Bitcoin supply shock 2024, send it and let's freaking go. Back to this. Can this volume of Bitcoin be purchased at the current market price? Certainly not. The available supply of the Bitcoin is limited, meaning acquiring such an amount will drastically drive up the price due to the high demand against the limited supply. Facts. This dynamic can easily propel Bitcoin's value between $150,000 and $250,000 per coin. Now you understand why Gary Gensler doesn't want that ETF. They don't want Bitcoin to outshine their crappy fiat currency called the US dollar. Now, as shared here, BlackRock, if you didn't know, owns 8.1% of MicroStrategy. Therefore, BlackRock is indirectly investing into Bitcoin, 100%. They actually own 8.1% of MicroStrategy, which is equivalent to 12,833 BTC. I also like to point out, if you didn't know, BlackRock is also the primary shareholder of Standard Chartered Bank, and I heard a statistic that they have a piece of the pie of over 80% of the companies in the S&P 500. That's how powerful BlackRock is. They're larger than the GDP of most nations of the world, maybe minus the United States, China, and India. So this is obviously a pretty freaking big deal. Now, yeah, shout out to Michael Saylor. And again, Fink owns a piece of literally every major company in the S&P 500. That's how large their power is. Now let's quote Michael Saylor. I shared this video yesterday, and in the JV React session, I'll actually play the audio in a little bit. But yeah, it went viral. We got 898 hearts, 236 retweets, which is a lot for my account. Now, here's what Michael Saylor shared. I want you to pay very, very close attention. And if you're getting value out of today's stream, let me know in that live chat. Smash the like, smash the sub. I appreciate it. Here's what Michael Saylor had to share. If we look at Bitcoin and model it as digital gold, you know the market cap goes to between 10 and 20 trillion. But remember, gold is defective property. Gold is dead money. Let that sink in, Peter Schiff. Gold is dead money. Now, you have $1 billion of gold, and that sits in a vault for a decade. It is very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. Preach. They would buy $1 billion of commercial real estate property. And that's the reason why, because I can rent it and generate a yield on it that's in excess to the maintenance costs. So if you consider digital digital property, that's a 100 to 200 trillion dollar addressable market. So I think it goes from 10 trillion to 100 trillion dollars as people start to think of it as digital property. What does that mean in terms of price per Bitcoin? Here, pay attention. At $500,000, that's a $10 trillion asset. And at $5 million per Bitcoin, that's a $100 trillion asset. And then Lex Friedman asked him, so you think it crosses $1 million? Can it go even higher? In which Michael Saylor responded, yeah, I think it keeps going up forever. I mean, there is no reason we couldn't go to $10 million per Bitcoin because digital property isn't the highest form, right? Preach. Gold was that low frequency money. Property is mid frequency money. But when I start to program it faster, it starts to look like digital energy. And then it doesn't just replace property. Then you're starting to replace bonds. It's $100 trillion worth of bonds. There's 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? So I think there are 350 trillion to 500 trillion dollars worth of currency derivatives in the world. And when I say that, I mean things that are valued based upon the fiat cash flows, any commercial real estate, any bonds, any sovereign debt, any currency itself, any derivatives to those things. They're all derivatives and they are all defective, and they're all defective because of the persistent 7% to the 14% lapse in which we call inflation. And to watch this interview that Giga Chad Michael Saylor did, check the show notes below the video in the description. And what are your thoughts surrounding his $10 million Bitcoin price prediction along with a $100 trillion Bitcoin market cap? Let me know your thoughts in the comments right down below. Now let's kick into high gear with our live Q&A session. Massive shout out to everyone in the live chat.